The stores are open, the lights are on, but the cashier slides your card back across the counter. Cash. Gas stations deliver the same answer. Rent day arrives, but the landlord refuses to accept a transfer. At first, you assume it's just a temporary technical issue. Give it an hour or two, you tell yourself. Then you look out at the streets. People are lining up in front of closed bank branches. Shopping carts are filled to the brim. Everyone is trying to pay with crumpled bills because cards no longer work. The television is shouting in the background. The financial system is under emergency review. And in that moment, it hits you. The realization lands like a punch to the stomach. Your money isn't where you thought it was. It never truly was. It was only a number on a screen. And now that screen has gone dark. It may sound like the opening of a science fiction story or a dark novel, but it isn't. This has happened in countries once called modern, safe, and too stable to fail. And when moments like this arrive, life doesn't slow down. It snaps. The balance of wealth, security, and survival shifts overnight. Let's remember Argentina. The year is 2001. Years of poor management, rising debt, and IMF bailouts had pushed the country into a corner. People were scrambling to convert pesos into dollars and move their money abroad. Cash was draining from the banks. The government's response was swift and unforgiving. The doors were shut. They called it the corralito. It sounded harmless, a little corral. But for the people, it was a cage. Weekly cash withdrawals were capped. Dollar accounts were forcibly converted into devalued pesos. Savings that had taken years to build lost half their value in just weeks. People who had saved for a home, for retirement, for their children's future, woke up one morning to find it all had vanished. The streets filled with the sound of pots and pans. The middle class, once convinced it was safe, suddenly found itself standing in uncertainty. When banks shut down, money doesn't disappear as an abstract idea. Bread becomes expensive, milk becomes unaffordable, rent goes unpaid, and Argentina is not alone in this story. Cyprus, 2013. As part of a bailout imposed by the European Union, bank accounts were frozen. Deposits above 100,000 euros were cut. In other words, people's money was seized to rescue the banks. The hardest blow did not fall on the wealthy. It hit businesses that could no longer pay their workers. It hit the elderly who were locked out of their pensions. It hit families who could no longer afford their children's education. Lebanon, 2019. After years of corruption and economic collapse, banks began limiting people to just a few $100s a month. What you actually had in your account no longer mattered. Some people entered bank branches not with paperwork, but with guns. And every time, the same truth surfaced. The money you thought was yours wasn't. It only belonged to you as long as the system allowed it. Even in the United States, the place where people say, "This could never happen," it did. 1933, the Great Depression. President Roosevelt declared a nationwide bank holiday. For 4 days, not a single bank operated. People couldn't withdraw cash. Businesses couldn't pay wages. Uncertainty spread everywhere. Only after banks were inspected one by one and selectively reopened did confidence slowly begin to return. But there's a question that has to be asked. Why did even the world's strongest economy have to shut down its entire banking system? Because banks don't hold your money the way you think they do. They operate on a fractional reserve system. That means most of what you deposit never stays in the vault. It becomes loans, investments, and debt. When everything is running smoothly, this system works beautifully. But when enough people demand their money at the same time, the illusion cracks. And in moments of crisis, governments usually protect the system, not the citizen. Withdrawals are restricted, accounts are frozen, value is erased, and in the end, you pay the price. Now ask yourself this. What would you do if your card was declined tomorrow morning? If your banking app refused to open? If your paycheck was delayed indefinitely? What if this didn't last a day, but weeks? How would you take care of your home, your family, your basic needs? This isn't fear-mongering. It's awareness. The financial system wasn't designed to protect you. It was designed to protect itself. And when pressure hits, banks reveal what they truly are, not vaults, but fragile structures built on trust. When that trust breaks, control disappears with it. This may sound like a nightmare scenario, but it happened in Argentina, it happened in Cyprus, it happened in Lebanon, it happened in the United States. This isn't a prediction. It's history, and history warns.